Victor, before I kick off in terms of looking into these results, let's just look at some of the comments that we had from the Executive Director of the Exchange with regards to changes of the Exchange, modernizing the Exchange. You're looking at an extension of opening hours, the market expected to close now at 3 o'clock to overlap US trading hours, possible deal with the Nadaq to improve the trading platform that you have, increasing the stock price movements daily limits to around 10%, and introducing market makers and short selling. All of these would you see as positive developments and perhaps fueling activity further down the line?
Good morning, Samantha. Yes, of course, I see it as being a positive development in the market. And that's because the market up to now has been very shallow. The regulators are trying to make it deeper and introduce new products so that investors can really participate in the market. Right now, there's too much move in the market, driving the market to invest in stocks, and that's because confidence levels are down. But with the introduction of all these new reforms, for instance, like introducing new products into the market, we expect to see increased investment activities, particularly from foreign investors who wish to participate in the market, in the Nigerian market, but don't have the means and the avenues or right securities in which to invest. So I believe this is a very positive step to take on the side of the regulators. Yeah, that's it.
Victor, let's focus in on some of the results. Of course, we saw First Bank's share price almost rising by 5% yesterday. Who knows where it would have gone if we had that 10% limit being introduced as of yesterday. But looking at those full year results, looking very strong and from a profit basis, but looking at their total loans and advances only being extended by 9.2% or growing 9.2% during the full year period 2011. Was that disappointing from your side?
Sorry, you meant the turnover?
In terms of total loans and advances, the growth there was only 9.2% and seen as disappointing by the market.
In particular, I don't think it's very disappointing because given the risks in the market, right now we don't see too many banks wanting to extend loans to customers, and that's because they've been through some regulations of some sort of reforms that has led them to shy away from that. If you look generally across the board, you'll see the same thing repeated in some other banks. For instance, Zenith Bank, we noticed that Zenith Bank increased its investment in treasury bills by a very, very large percentage. Since we've seen that also in some other banks as well. So we feel that in 2011, banks were kind of moving towards more safe assets rather than risk assets. On the part of First Bank, even a 9% growth in loans and advances puts its loans and advances portfolio to a region of 1.2 trillion, which is by far bigger than most other banks in the industry.
In the meantime, a National Salt Company of Nigeria, I know, is a stock that you're also keeping your eye on. We had a Q4 update from them. How's the stock reacted to those numbers, and what are your thoughts on the numbers that we saw coming through?
Market reacted very positively to NASCOM's results and full year results, and that's because the investors saw increased performance in the company. Turnover grew significantly by 8% to 9 billion. PAT also grew significantly and very large by I think 30% to 5 billion.
Would you be buying?
No, sorry, 30%.
434 naira.
434 naira. Yes, it's quite attractive even at that price. It declared a dividend of 70 kobo. Translating to a dividend yield of 16.23%. It's quite a positive for that stock, and that led to the increase in its share price, capital appreciation in shares.